So hello everyone. Actually, I just wanted to record this video to showcase how I will talk about this particular pair right here. See, so most of you don't understand the reason why I might take this as a buy. For the reason being that most of you are like you want to take sales and those kind of things. Yeah, I strongly agree with you because the market is reactive but not predictive. Okay, so you can see as of right now, the market has taken this low, and you can see from taking this low, you can see that liquidity has been taken, and now we have built this particular strong liquidity area. Let me see, diagonal liquidity area. And when you look at it, you might say this might strongly form a channel, then it drops to the downside, which I strongly agree with you guys. But the moment this is broken with a particular full candle, I strongly believe that the market wanting to go to the upside. But if I do see wicks coming to tap into the top diagonal line, then that is where I also agree with us taking the sales as an opportunity, which means that the market just came to tap into this particular zone right here, like then to strongly go to the downside. But what you should look right now for is that the market has actually created liquidity below. As I said, the market takes zones to create these liquidities, then come back to clear them off, and making you to think in the smart way, like saying you are trading smart money and then you get losing money. Only it's not. It doesn't mean if you are doing the smart money concept, you don't lose money for other smart money traders. Okay, you see, we have a very refined way of looking at this, which we have all been getting it wrong. Okay, so you can see this whole zone was being marked up from the 4 hour time frame, and when we go to the 4 hour time frame, nobody will tell you what I'm saying. So yeah, so you can see this was marked from the 4 hour time frame, as you can see from this particular candle right here. Actually, we always look for the last candle before the move up when it is at the downside. So you can see from here, this was the last candle before the move up, breaking structure. But now when we look at it, that last candle did not engulf this particular candle, and the only one that engulfed was this particular candle right here, which actually took the move to the with an engulfing candle, right? So when you are looking at an order block, you are looking for an order block that has an engulfing above it, right? So now let's look at examples like this. Okay, there's always a saying that don't look at the other side of it, then blah 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 and those kind of things. Yeah, so you can see we have an order block right here which did not hold, and you can see it is a very strong regulation that after you see a demand not holding, or sorry, a supply not holding, actually means that the demand will hold possibly. So you can see from here the demand did not hold, yeah, the supply never held. Right from here, this was a supply that broke this particular structure. It came down with an engulfing candle, giving this particular candle an opportunity that it is what an order block, a valid order block, of course, which all of us would have taken into consideration as an entry. But price came and validated it by not taking that particular order block seriously, and then it broke it. Okay, so after breaking it, you can see we have a break of structure with a wick, right, tapping into this particular order block that actually broke the structure. Yes, there's no engulfing and there's no imbalance that showcases that it is actually a valid one, but at least let's take it into consideration. So right now you can see from the other side of it is that you have another order block, right, that is actually right here. The reason why I'll pick this order block is because the first order block will be this one, but it has not been engulfed by the previous one, which it's almost just inside of it, and I don't kind of like that kind of order block because it is always weak and it doesn't hold. Okay, and it never holds. That's never held in my position before. Sometimes it might hold, but maybe it has a breaker block around it. So now the second thing I look for is what actually broke the structure. Now you can see price rejected this pin bar, easy, and most of the times when you see a pin bar like this, you want to see price pushing to the downside. But in this one, what did you see? You see that price rejected off of it above and just went up, breaking it, right, breaking the previous supply zone, which is actually the other block above. So right now, after that, what you need to look for is what supply zone possibly pushed this to break this particular what demand zone actually pushed it to break this particular supply zone. Then you now look at this as an opportunity that price comes back here. After price coming back, you'll be like, oh, now I can't take this because there's no imbalance. Fine, wait for it. After price pushes, you can see price after price came down, it creates so many other blocks, like two other blocks, and then so we have one here, probably would have hold, and we have another one here which came second, and we have another one. The other one is actually what I love because it created a W pattern on the lower time frame. When you go to the lower, it is a W pattern, which I actually always recommend. So you can take your entry from here, stop loss below here. You are going to push it up, and you can target this first areas this order block, yes, it will hold because we are coming from a very strong rejection. If it holds, it comes back, it's going to tap into something and push it upside until it gets a potential to hold possibly. Yes, as I said, always market is reactive, not predictive, right? So now, after looking at this, you might not get this earlier to enter, right? So what you just have to wait for is wait market to do a break. So now after this break, as a which I can't actually move this structure. Now this has actually taken liquidity below, and see this is actually the order block. As usual, look at it from this. We always have a hidden demand area on this. So now from this place, you can just quickly look at this as your hidden demand area. If it might not hold, possibly I always think with this strong push, market doesn't have to return 50% of it before moving. Sometimes it returns to 35% of it before moving. So now just pick this, and you can just take your entry here, then your stop loss somewhere below or maybe even here if you are not. So now when you go to lower time frames, all this will be revealed, and maybe even after bringing your POI to this, you can take this whole area as a POI. Then if market taps into it, now fine, you look for other entries. So you can see after market came and tapped into it, it went back and broke this area, right? Now came back and tapped, giving you a better price to enter, and you are taking this to the upside, probably targeting this first high. And then if market was to move higher and higher, just make sure this is your first target, right? Then the second target, I will possibly target this one, okay, because it is a very strong POI to look at, and price didn't even get there, and that's what possibly we are looking at. So right now, I'm possibly looking at price to actually float and reach these areas to give us a better price to enter. So as you can see, price created this move, and then we are currently seeing this. This might hold, right? So yes, for me personally, I'm waiting to see how price react on this particular one, because we have this being violated. It got an opportunity to tap into this and rejected, went down, went up. I was inside of this, but price violated me out. Okay, so now price actually doing what it has to do. Just follow what price does, and don't be hesitant to see what like just be quiet and take a reaction. When you see whatever happens to price, take a reaction from it. Okay, don't be like, I'm waiting for this, I'm waiting for that. Always react, because when you think I'm waiting for this, I'm waiting for that, you're always going to miss trace a lot. Okay, you'll be like, price has given you this, has given that, done that. You'll be like, I'm waiting for a candlestick rejection and blah blah blah. Look, after it reaches to your POI, take it. What if you don't take it and then maybe it comes and stop you out? Now you'll be like, if I take it, I would have taken a loss. Yes, you'll be happy. But what if you don't take it and it comes here, taps into the zone, and then it reaches to the upside, shooting with a speed of light? Be like, whoa, I should have kept a limit order and those kind of things. So that is always the advantage of taking risk orders instead of confirming them before. Okay, sometimes confirming orders are always sometimes risky as well, because you will lose money. Okay, because you will confirm and be like, yeah, I'm sure. Then you see that your confirmation will come and validate. Then just that way until it gets its own momentum before shooting to the upside, leaving you behind. And to get to a time, you be like, okay, fine, it has validated me several times, meaning the price not going to shoot to the upside. Then by the time I realize it is that same thing that is what shooting to the upside. So just a quick gist for you guys to have a feel of what I'm actually looking at on AUDCAD, but also my view of taking entries on most of the currency pairs that you can see. So my favorite personally is actually the EU, because I am trading the Phantom Star, and like, has liquidity. That's my reason, and to the point, most of my mentors are trading that, and that actually gave me that kind of pleasure to also trade this as well. But I found it very useful to use it on other pairs like AUDCAD, GU, AU, and also gold and Nasdaq and all those other pairs that you can find. So commodities and those things. So they are all kind of pleasures that you can look for. So thank guys for watching this video, and I hope you guys take values from this. So I'll be bringing up my breakup block part 2, and I hope you guys stay tuned, and I'll be featuring one of the traders I've been with for some time now, and Andy Drew. Actually, he has a forex channel, FluxFX, FLUX FX. Okay, so you can Flux Forex rather, so you can actually check him out, and yeah, I think he will help you. He's also talking about a lot of this in his videos. He hasn't posted it yet, most yet, but I think the future he'll be doing this. So you guys make sure to stay tuned, and I'll be updating you guys on what to do next. I'm sorry, on what to look for when you are actually approached in the sense of order blocks and also breaker blocks as well. So thank you guys for staying tuned. Do not forget to like, subscribe, and share my video to anyone who you think deserves it. So thank you guys, and see you in my next video. I'm out.